after a 12-year run, the bull market in commodities has recently faltered, raising the question of whether the supercycle in commodities is over or if this is a near-term slump. Joining me now to discuss his outlook for commodities is Peter Sorrentino, portfolio manager of Huntington Real Strategies Fund. Pete, welcome.
Thank you, Jennifer.
Commodities sold off in 2008 at the height of the global financial crisis, and the complex looks to be stumbling again in the face of slowing global growth. Whether it's gold, oil, or copper, you look across the board. Is the commodity supercycle over, or is this a near-term slump?
To some extent, this is the end of the cycle for a lot of the commodities. You're seeing a lot of greenfield capacity because of the prices will be coming on stream. And it's that supply that will essentially force the prices lower or will halt them in their tracks, so you won't see further advances. But the prices that we were seeing drew a lot of capital in, a lot of investment, and that brought a lot of capacity, and it's still a supply and demand world.
So has the commodities market entered a prolonged period of slower growth, and should we expect a prolonged period of falling prices?
I think in some of the areas, we've already seen pretty precipitous price drops. Remember, it was just a year ago that coal, at least coal for export, was at $325 a ton. It's now down to around $220 something a ton. So some of the prices have already suffered what would be, pretty cataclysmic declines. From here, they level off, and they'll simply have to wait for demand to catch up with supply. And this is kind of happening across the board. We're seeing it also in oil. We've seen oil recently collapse down. West Texas Intermediate drop below 100. And that's because of all the liquids that are being found in the continental U.S. As a result of the natural gas fracking that's been going on. So it's this new supply, non-traditional supply that's suppressing prices. So they'll all go into a period of price correction. They'll level out for a while, and then they'll just have to wait for the next cycle. And this has played itself out. We saw it in the 1970s when the first oil boom peaked out in 1980, and we've seen this cycle that started at the beginning of the 2000s run out through now. It's, as you pointed out, 12 years. So it really has gone. In this case, it's interesting because it all synchronized at once, and that has led to a number of them sort of going off into a period of decline at the same time. There are still a few that will probably have bright prospects for the foreseeable future, but they too, at some point, will suffer the same fate.
Let's break down the commodities complex. Which commodities are poised to outperform, and which commodities would you avoid?
Well, at this juncture, I think you want to try to avoid the industrial side, because we've got a lot of metals capacity coming online in terms of the industrial metals, copper, zinc, iron ore. Those are all coming out in sort of record numbers now. So that's where the weakness will be. Even with a return to moderate economic growth, it's just the magnitude of supply is really going to dwarf that growth. The one space where it's very positive is in agriculture, because of the odd weather patterns and the fact that we have an emerging middle class in so much of the world. Demand for food will continue unabated. Now that will bring innovations, and that will bring more land into production, but that's a much slower and harder to develop cycle. So there's opportunities there in that space. We've seen, as I point out, some of the other areas where the energy complex rolled over early: natural gas in North America, coal. Those have basically bottomed and are starting to show some positive indications. So you can start to, I think, move cautiously into those, anticipating an upleg that they oversold and that are now fairly attractive values at this point.
You think that natural gas is staging a rebound? And if so, what's driving that?
A lot of fuel switching is going on, and that was happening very slowly. Those that could switch easily did so right away. Now we're facing an issue where we have the next level of the Clean Air Act will go into effect next year, and a lot of electrical generating capacity, a lot of chemical capacity would have to basically alter their processes very expensively to continue the way they are. If they switch to natural gas as a fuel or a feedstock, they can eliminate a major cost of that compliance. The cost for them now is simply getting the distribution tie-ins so that they can access the pipelines. And that created an opportunity in natural gas pipeline, typically limited partnerships that are traded, and we've seen some M&A activity in that space. So again, there's an opportunity there. We've recently seen prices in natural gas, which had dipped down to just below the $2 an MCF, have basically started to climb again. So there is an opportunity in that space going forward.
All right, what about crude oil? You touched on this briefly. It's really been cruising higher since 2005 with the exception of 2008. What is your outlook for crude oil?
Well, crude oil is still the primary transportation fuel. So as economic activity picks up, you'll see demand coming back up somewhat. But you've got efficiency moves in most of the developed countries, big efficiency moves here in the U.S. That is going to cut some of that demand out. As was noted last year, the U.S. has now become a net exporter of motor fuels using surplus refining capacity. So from that perspective, oil will fall down to a normalized level. I don't expect to see the price retreat to anywhere near what it was in 2007, but we are going to see it soften a little in here. And there's a lot of new capacity coming in, and that capacity, as it finds its way into market, is going to hold that price there. This is one of the big debates that we saw in the U.S. over this Keystone pipeline. It's a way to get not only the tar sands oil out of Alberta, but also to pick up all of the non-gas liquids that are coming up in the Dakotas right now, currently being hauled by rail car. But if that pipeline can be completed, that supply comes into market, and that again will serve to really keep the price in check for the foreseeable future. Then we also have the deep water places in Brazil, offshore in East Africa, West Africa. Those are really going to add new capacity to the market and serve to really keep the price right around where we are for probably the foreseeable future.
All right, and I have to ask you about gold. With easy monetary policy around the globe, does gold rebound?
Well, the central banks have gone out of their way to try to break the gold rally, and we saw that when they came out in March with a lot of their commentaries about no more quantitative easing. However, even with the events of the last couple of weeks in the marketplace, we've begun to see gold again, after selling off somewhat, has headed back towards 1,600 an ounce. The one area where you don't see new capacity additions actually being adding new supply has been in gold. Most of the easy deposits of gold have been mined out. The gold that does remain is in politically rather unsavory places. The other gold is very expensive to extract. And if you just look at the level of central bank buying that has been announced and declared, it really presents a pretty powerful demand dynamic going forward. And that, I think, gold has probably one more big leg up. And after that, I think there will probably see it level off for a considerable period of time. But I think we will see one more big rally in the price of gold before that happens. And so I think the stage is being set right now for that. And again, it's the events, as you pointed out, with all the monetary easing and the potential for currency debasement, I think that's really driving this. And so until that is absolutely done with, then I think the prospects for gold still remain very positive.
How long does that rally, that last leg, last for gold?
Typically, the last run in any commodity is always the most spectacular. So I think easily takes us into probably the mid $2,000 an ounce range. I've seen numbers of 2,400 an ounce. I don't know that we quite break that level, but it will be almost a parabolic climb when it does happen, and some of it will be panic buying. As we've already seen, some countries have restricted their mining sector's ability to sell to anyone other than the central bank. Venezuela took control of their mining sector for gold. The Russians have done the same thing. All production has to be sold to the central bank. So when you see those things happening, the stage is being set for what will essentially be, I think, the most spectacular, albeit the last leg of the run. It will be one that will definitely take the metal considerably higher than where we are today.
All right, Pete, we'll go ahead and leave it there. Thank you so much for your time and insight.
Appreciate it. Thank you.